is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour on this, I should know, 16th day of May, halfway through the month. Oh, quite an interesting month, huh? And thank you to our great hosts that we had earlier in the day, and I hope I can keep up that standard. Let's go right into it, because today's Thursday. Thursday's the day that you have a full cast here at TFNN TV. Go right through until Andy Hecht at the end of the day. Let's get to the numbers. The Dow's down 106 after being down even sharper at 17,533. S&P's down 15 at 2,056. Comp index is down 46 at 4786. Get a theme here that it's all down. And the VIX index is at 22.05. Remember in the 20s. Hey, I just got an email. I can't believe this email. Paul, where have you been? He types me big thing, says, the VIX index is clearly dictating where this market is going. When you ever admit this? Paul, I don't know where you've been on if you listen to the show, but the VIX is my specialty. I've been talking about it for decades. I've made it. I've even given to subscribers the exact numbers. I said in the 20s, you get triple digit down. I can't even talk about it. I'm sorry. You're just out of lunch. No, you're not out to lunch. You're out for the month. So the S&P is down 15 at 2,000. Why do you think we went short at the very top? Because of the VIX index. Jeez. 2,057, down 15 in the S&P. The E-minis have gone way below the 200-period exponential moving average in the 120-minute chart, which is at 2,085. We're at 2050 right now. The 10-minute chart has just made a nice little V-shaped recovery. I think it's going to test the 2048 area, 2048.50 area. That's the 9-period exponential moving average. However, what's very important about this is that it has, it's already exceeded the number of bars to get to the low that was made at the 10-minute chart at 20 to 3 this morning and at 10 to 3 this morning in the 2051.75 area. So if it can do that and hold for 3 bars, 3 10-minute bars above that level, that would be a positive and say, you know what, just in this particular phase, because of options expiration, we could see that the low for the week might have been made just a few minutes ago. Got to watch that real carefully. So let's do this. Let's go. A lot of people making comments about the VIX because they know that that's what I talk about all the time. All the time, Paul. Gee. So let's go on with this. So I want to show you the charts at the same time. We've got time. There's no rush here. This is the Dow chart right here, and I'm going to show you the bond chart. I finally figured out how I could get back to 1978 or something like that. So it's that long-term channel, and I love channels. So this is it. This is the Dow. We were short the very next day after the top on the 8th. Actually, I think we started shorting on the 8th, and then the 9th we added to it. And that's right there on the Dow at 18,016 was the high on the 8th, and we've been coming down ever since. And now we've had so many down candles, 1, 2, 3, 4, 5, that you just got to have an up candle at some point, right? But I'm really worried about this W formation in the weekly chart. So I don't want to take too much time now to talk about the weekly chart. I'd rather do it tomorrow in Technical Friday because it'll be close to the end of the week, very close to the end of the week. So the Dow at this particular time is 17,630s to 650s as resistance, and any breakdown from 104 down this afternoon at 25 minutes past 2. If the Dow is down 135 or more, we could close very ugly. This is the time right now that this is options expiration, the time to get a really good bounce going if they can do that. So the S&P, SPX.X. I'll talk about the VIX in a moment as well. I had a good question about the VIX. So this is leg B to the downside right here. And what's really important about this is that what we're looking at is that the weekly chart also hasn't taken out the very important low that was made back in May, the week of the 20th. That was at 20.25.91. You're going to be watching that real closely. You take that out, now you've all of a sudden changed the whole schematic, the whole template that we're looking at. And that would imply to the monthly chart as well. But the monthly chart on a price basis is still looking very good. Technically, it leaves a lot to be desired. All right, that's understandable. Let's go to the QQQ, because most people look at the Qs rather than comp index. In terms of the Qs, you at a 106.77. I said to subscribers to my opening call this morning that the 106 area, you don't want to break that. That's really important. That's sacrosanct right now, because if you're going to the 105s, there's no question that you're vulnerable to test the 104.40 low of the 6th of May, and that'll not only break a trend line to the upside, it'll be very negative in the Qs. Let's go to gold, GC. Gold is screaming to the upside. It's up 27.80 right now. I believe I'm accurate, around about $27 at 13.16. One of the reasons why for subscribers, we are short and we are long. We are short the Dow and in other areas, but we are looking at the gold miners as being very positive. We've been long and we continue to be long. And what's happened is you've broken out in the leg body. This could be the neck of the weekly chart. And this is going to be really important to monitor. Why? Because if there's a breakdown and the dollar starts to rally even stronger, it's up today, I'll go to it in a minute, we could get a pullback and then a test of the breakout level of 1308. That's the high of the week of the 6th of May in the continuous contract. And that's going to be a big test. Because if we break and all of a sudden you're looking at gold in the 1270, 1265 area in the next 3 weeks, that's going to say gold is now it's going to have a timeout and the dollar is going to rally. So this whole Brexit thing is going to be very important for currencies and all. We'll look at that right now. We'll go straight to the currencies. So the dollar DXY, very strong candle. It's still a leg A, gray A, because it's below the previous peak E high of 97 on the 30th of May. But what's really important about this, remember I spoke about it and I said, the dollar still looks to me like it's in a trading band right here. And if you look at the concurrent USD JPY, this is the euro dollar currency pair. It's now reversing and coming back after a peak B down to test the lows of 1.110. I spoke about this yesterday. Not very good action right here. And the weekly chart says it needs a bit of a timeout. So let's just look at it together with the British pound. And the British pound, you can see, is already almost testing the low, a very important low of the 6th of April of 1.4018. And today's low is 1.4021, real close. So this arch formation is going to get a big test over the next week. It's a weekly chart. We can go all the way to next Friday because Brexit's coming up then on the 23rd, I believe. So now let me just finish up here. I want to go to crude oil as we go to the break. Crude oil is down quite sharply, down $1.56 at that 48 to 46 level. So 46.45. I missed this. This is actually now looking like it could go deeper because of the weekly chart. And I will be back straight off this because we want to look at the very long-term bonds. I've been talking about the Japanization of our bond yields. We'll go there as soon as we get back. Dow's down 95. I'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I just wanted to show, this is the monthly chart of the CBOE Volatility Index. It is my bailiwick. And I'm just trying to think, I can't remember her name. She used to have a show here at TFNN. She used to use that term all the time. I loved it, bailiwick. And it's been your speciality, thing that you like. So what we're looking at here, if I can just double check to see that, yep, that's it. This is the VIX index, but this is a monthly chart. We're halfway through the month, but look at the weekly chart. That's going to be the first time, if we hold in the 20, above 20, to be the first time we've closed above 20 in a very long time, since way back over there. That didn't close, that closed, since the week of the 26th of February. Now, what we're going to do is we're going to look at the long term at US. This is the very long term with the Chapman Wave notation. Found it. 30-year Treasury bond continuous contract. Look at this. You know, I read it this morning by chance because I've got the TYX, and for some reason I lost because Reuters or someone must have bought the index, so they started from a different time frame. So I had this going back just like the, here we go, 30-year Treasury bond interest rate. This is the yield, 1981 all-time high to current price, 116. Well, it's not 116 now. It is current price of, edit, 616. Got it. And it's not 15, it's 2016. Okay, so look at this. That's that incredible channel. And you remember what I drew within it? I have a whole series of techniques that I talk about when we're talking channels. And in the channel, I have the inside track. That's that resistance dashed line. It says whenever it gets into that range or touches it, you could see a pullback. And whenever it gets to the bottom, that's the inside, Chapman Wave inside track buy zone or propellant zone. Repellent zone, propellant zone. And we're in the middle. All right? But wait a minute. This is US.P. This is, where did it disappear to? Oh, I typed it onto the chart. All right. This is, I'll say it again, USP. This is the inverse. This is the real thing. This is the 30-year Treasury bond. Look at those down arrows. Look at those up arrows. It actually goes back even earlier. It goes back to 19, right there. This starts in 1977, 7. And the low was made in 1981. 1981 minus 43. Because it's proportional, it goes to a minus. So that's really, this is, don't look at the numbers. Just look at the highs are exactly right. The lows are exactly right. The letters are exactly right. The numbers are completely different because it gets smoothed out every month. So you'll always get the right high, and right low, but you won't get the price being the same. So unlike the dollar index, which actually still has that 120 round number high, right from way back, this is different. This gets smoothed out. It's not an index per se. It's a continuous contract. Look, from a trough low in 81, it goes to a peak E, pulls back. Remember the Chapman wave, what do you look for? You look for the D. It can go to an E and an F, but D is really what you want. And it goes to an E, goes to the D and accelerates up to an E, pulls back, goes to peak C1, C2, because it just missed by a fraction. That's another technique in the Chapman wave. Pulls back, starts a brand new to a peak F, pulls back, peak E, pulls back, peak D, quick D. The quicker you go, the quicker you can have a pullback. It doesn't say massive decline, but it does say a quick pullback. Then another quick ABCDE, pulls back much longer, not that deep, but much longer. Then it goes ABCD to the 2008 high, 2007 December, I think, high, pulls back for half a year, and then starts ABCDE, goes to the high back in August of 2012, pulls back, and then what happens? Yeah, so it pulls back, and it goes in a very quick move down, so it's ABCDE, pulls back and goes ABCDE. Is this a brand new F, or is this an alternate count F/B? Well, I believe that the Japanization of our bond yields is still continuing to this day, and therefore there's a much greater chance at this particular point that we have to constantly see that there's competition for the lowest yields. Remember, every trend culminates with either an explosive move down or explosive move up, or it culminates in the Chapman wave with a D, E, or F. And on the trough, the downside, you use other techniques, but you have to still notate. I didn't have time to notate the downside here, but I use the technicals a lot more in that particular instance. So what we're looking at, we're in the upper range. Let me make this exactly the way I usually do it. This is green. Oh, I got a whole bunch of questions. I do want to do this. I'm sorry, I need to do this because there's a lot of discussions. It's a very important period for bonds. So in here is the resistance area. Now, these things can slide. You will see sometimes, you'll see when the month changes or the contract changes, you'll see it get smoothed out, and you'll find the letters are somewhere up here and the trend lines have moved, but the price chart, no, the chart itself always remains constant. So we're right now touching the resistance line. And if you come down to the bottom, this is going to be red. And this inside track, I can actually move the inside track a little bit to make it a more a functional rather than, see, if I put it here, a little higher up, I think it means more. So I'm putting it right there, and that's green. And this is the buy zone. Remember, it went into the buy zone back in 2009, and we've been rallying ever since. So I wanted to show that. And it's very important because the Japanization of our bond yields is continuing to this day, to this minute. So on a very short-term basis, what are we looking at here? We're looking at, in a monthly chart, I've got something slightly different. A, F, G. Oh, that's interesting. Oh, I'll have to review that because it looks to me like I've got something a little different. A, B, C, D, E. Maybe I missed something. Maybe I didn't. A, B, C, D, E. That's correct. So this is a brand new ABC. Yeah, bonds are still very strong. So even though we can pull back a little bit here, I suspect we're going to go to a D in the next by next week. I think we make a short-term top. I would not be surprised if we make some kind of a low next week in the market. Okay, so back to our story, just to show you the 10-minute chart. The 10-minute chart of the ESU. This is now the September contract. There you are. That's exactly the range we hit. That was circled. There it is, the V-shaped pattern. Very nice. Okay. Hope that helped those of you who are trading intraday for the 10-minute chart. Now that Dow's only down 89, S&P's down 13. A lot of selling pressure early this morning. Now let's go to questions. I'm going to go to let's see, crude oil. Yeah, I made a mistake. Not in the notation because I got that correct. My thinking was that bonds that crude oil would go between 48 and 46. We're in the 46 area right now, but I'm suspecting based on the chart formation that I'm looking at here that there's a good chance we're going to test the low of 44.25 to 43.71. 71 was the low on the 10th of May. That's the way I'm looking at it, and that could be hurting the market a little bit more going into next week. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 75.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let me just do this. I never had time because I was doing so much. I was looking at the emails. I was also getting that bond chart organized. Look at this move. This is just so typical of options expiration. Look at this. Left side, right side price time match to the fulcrum, the what I call the plumb line, right here at 1040 at 2040.75, and we've just soared right through into the resistance area right now. This is a single leg A to the upside. So that is really important because it's saying that the oversold condition, let me just show you. I wonder if it'll show up in the VIX index, VIX.X. Yep, there it is. So what have we got here? We've got Here we go. So you've got an A, you got a B. This is the VIX index. You've got a C, 1, C2 Chapman wave technique that we use. Let me just move this to the side a little bit more there. You actually got a C1, C2, C3 top, and then it pulls back. Oh, man, one hand, not good. Although it looks very pretty. Pull back, and now look, you've got another buy signal right there. And what do? You go peak. Is that a four peaks? A, B, yep, C, D, and there you are. So the 10-minute chart just made a peak D in the VIX index. It skyrocketed to 22.89, a new recovery high, and now it's pulling back. And that's kind of typical of what you could see intraday, either the day of or the day before options expiration. So there you are, only down 58, but the S&P is still down, much weaker. It's down -9. I had a question about oil. So someone said they just took money off the table from the SCO trade, which is the ProShares ultra short Bloomberg crude. I've been looking at this and I thought, should I do it? Shouldn't I do it? Obviously, I should have done it. The low was 73.91 on the 8th of June, and it just made a high 73 to 90.88. I mean, these things really move. This is ProShares, so it's multi. I think it's 3%, three times long. And look what happened. It just screamed up to this level, and it's pulling back. But that turns out to be a peak E in if there's a no new high this bar in the 120-minute chart. The question was, where should I get back in? Well, I don't know if you're going to get a chance to get back in much lower. The preferable place is between 86.30 and 85.70, somewhere around there. You could have a 1-point stop at that stage. But you might not get it because this is a real fast-moving market. So that's just my recommendation. I think that crude oil now is going to test those lower levels. No, I shouldn't say now, within the next couple of days. So a couple of questions now about the Nikkei. Yes, the Nikkei. Look, this is a continuous contract. Ugly. Well, you remember I spoke about the Chapman wave arch formation. I showed you the weekly chart where a large arch can make a little right shoulder arch formation, like a lowercase h, and we've just done that. The monthly chart is looking very weak. I was asked about it, and I said, hey, it looks very much like the Deutsche Bank chart. I wouldn't be touching Deutsche Bank, DG. Dollar General looks fantastic. That was a mistake. Hey, that was all notated. What happened to it? Deutsche Bank, DB. Why am I going to a G? DB. Okay, look at that. It broke. This is the week that it broke the left side low, Deutsche Bank, of 14.78. It's down at 14.51. It has this week, which is getting a little bit late, but it can do it, or next week at the latest to break above 14.78. Because if it's able to do that, it can have a real nice rally on percentage terms to the 1660s, maybe even 70s, the 17 area. But if it fails to do that next week, unless I get a buy signal that's triggered, this thing is going to go even lower. Be real careful with Deutsche Bank, and the financials are also suffering right here. So I answered that question, answered the Nikkei, GPB. I just did that. I did the British pound, BP. Remember, I did the British pound just moments ago. It's the same arch formation. I put them all in the same category yesterday or the day before. PXD is a question. PXD, here we go. Pioneer Natural Resources, be real careful. I'll tell you why. It was looking good. It went into the sideways trading range. PXD trading at 153.52, down 8.98. This breakdown is not good news. And the weekly chart's gone peak A, B, C. It hasn't gone to peak C1 or C2, and it hasn't gone to a D. So this is time that it needs. At 153, I would not be surprised if it needs a little more time to test between 144 and 142. Hope that helps you on PXD. In other words, if you're short, stay short. I'd put a stop at 153.43. Probably put a stop at 156, 153. I'd say a 4.5 point stop, I think is fine. 4.5 point buy stop. And if you are short and it takes out 150 by Tuesday or Wednesday, I would start to peel off a little bit to take profits, and I would keep a core position. Hope that helps you. So the XOP we were speaking about yesterday, and what did I say about XOP? I said it made a peak F-top in the daily chart. It's in a leg D. Be somewhat careful. Now let me show you something very interesting. Trend lines and channel lines. I do a lot of work with trend lines and channel lines, and this one is testing its trend line right now. And the stochastics at 20%, real close to trying to turn up, and the MACD is not that negative. So I'm going to say that the SPDR S&P oil and gas exploration needs to hold if it closes any day. If it closes under, it's at 33.96. If it closes under 32, be real careful, because that's the 200 period simple moving average, which most fund managers look at. That's going to expand the MACD and take the stochastic down to the teens. And then you've got to expect single digits before you get a decent upside move. Hope that helps you there. I think I've covered a whole bunch of questions. One other question that I had that I wanted to deal with, let me just get there. I really can't answer. I was asked, am I the only one out of the hosts that actually shorted the top? Geez, I have no idea. I mean, I can't talk to that issue at all. All I can say is that this is what we've got. We've got the Dow, INDU. This is where we shorted it right there on the 9th. TOG, did I get that? The TOG is... started off on the 9th. Yeah, that's where we started shorting, right? Then we added to it. So, no, I really can't answer that question. And I don't know what it even means, because everybody has their own techniques. So let's look at this. Now the Dow's down 63. That's a really good comeback. But it's a comeback. If you look at the 120-minute chart, it went to a trough F after that H pattern. You remember the rule? The rule is that if you break the left side low in a Chapman wave arch formation, the lowercase h, that is, if you know my CD has chapter 13, slide 290. We talk about the arch formation, or the lowercase h. So the dreaded H pattern as well. That is chapter 17 in my CD, introducing the Chapman wave methodology. So 17,595 was the low on the 14th. In the 120-minute chart. It spikes to a peak A and then a B, and the B becomes a B minus because this bar earlier this morning just took it right out. That bar then closed at 70,471 underneath, and this is the bar that needs to close above that. Otherwise, it's going to be negative. Maybe I'll talk about it a little bit. No, tomorrow's Technical Friday. I'll do more tomorrow. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a question, and it was a good question. I wonder if I can even get back to the original question, because I responded and we had a bit of a communication. Yeah. What ticker does the VIX product have, you think, tracks the VIX best, because there are so many different products to choose from? So, you know, the TVIX is the one that we use. I did not buy this time for the first time. It was right there. I wanted to, and I just thought, you know, I was so busy with trying to get the market correct and all that stuff that I just left it as a trade, which is silly. It would have been a really good way of trading with it. That's the TVIX. I would not be touching this right now, only for one reason, unless you're absolutely used to this kind of thing. It's trading at 3.59. The moves on a percentage basis are really, and now it's are really big. And now it's so difficult to use what I have, which is just a tiny, 2%, if that, 1.5%, 2%. Risk. How do you do that with a stock that's trading at 358? It's very difficult. And also in the 2s and 3s, it's just a matter of hours before they announce that they're going to have a 25-for-1 split. They've done it already a couple of times. So that's a great tool if you get it exactly right. We had it exactly right. It was my fault for my subscription, for my subscribers. I just did not go in to buy it. I looked at it and I said, this is a trough F coming up for sure. It was at 210. We could have got it very easy the next day in the 215 to 220 area. Mea culpa. That's all I can say. But the UVXY is another one, and that hasn't got to a low point. It will, UVXY. It will get there. They all do eventually. Imagine, I wonder what would have happened if you had shorted at 450. Well, it wasn't 450. You know what I mean. No, 489,600. I wonder if you had shorted at 489,600 back in October of 2011, and if you were still holding it short and it's trading at $16.27, I wonder how much money you would have made. It's really difficult to tell. It keeps getting recalibrated all the time. But anyway, this is just a trading vehicle, and that was the other thing that I said to her. You could use this. Maybe there are a couple more that I just don't follow that closely. But treat them as short-term trades. If you want to hold this thing, you could be 100% right and lose 100% of your money. In other words, you could have shorted it back in October. What was it? Where was I in Australia? October of 2014. Somewhere when it was in the 7s or something, and look, the market from that particular level is trading not that much higher, and yet this thing has already gone down. I can't even say what it's gone down. I just know it was split a couple of times. So that's all I'm saying. Trading vehicle only. And also I said to her, Elsie, try to paper trade. I'm not sure if it's Elsa or Elsie. Try to paper trade with this. Get used to it. Don't just jump in. You will lose more money than you make if you're wrong. The timing has to be impeccable. Okay. We're done with that. Now I want you to do this. You remember I looked at Amazon and I said Amazon has made a peak D with a little doji top and a Chapman wave 2-bar reversal. It looks to me like it wants to pull back. It looks to me like the weekly chart has gone to a peak D if there's no new high this week. And I've got it in a leg E in the monthly chart. So that says to me when your leaders, look at Facebook. Facebook made a peak E already, made a peak E in the weekly. Tomorrow I'm pretty much going to be putting it down, a down arrow. But the monthly is still G/C, means that the technicals are still good enough to say, hey, maybe it's a G, maybe it's a C. If it's a maybe, just you don't want to be shorting it for that reason on a longer term basis. Short term, it looks like it's going to fill most of this gap. This is not good. I wouldn't be surprised if by the end of the day, we back down 135 for two reasons. One is this is a market that was a typical options exploration spiking short covering rally that we saw. And if you're looking at this, the volatility index has just gone to the 2150s. It's still in the 21s. That's selling pressure. Just keep that in mind. By the end of the day, it gets to the 19s, you will see this market actually up 65. I just don't see it right now. So there you are. Facebook's just about to get a down arrow in the daily and the weekly as well. What is it? FANG. Netflix right now is trading. Netflix is trading right now at 93.77. It made its high back in April the 15th at 111.85. It's stuck. 133.27 was the weekly high way back in December. December was the peak D high. I think that these are stuck. This is a market. We're in a bear phase right now. And if crude oil is going to continue lower, that's the reason why it was a mistake on my part to kind of ignore it. How could crude oil hold steady while the general market's coming down? Or how can the market come down if crude oil is coming down? So I think crude oil, actually, I'm wrong. I think crude oil is going down. The 44s would be my next, 43.70s to the 44.30s would be my next downside target. That was an error on my part. Now, here's another thing that I'm looking at. So we've got that. You've got crude oil. You've got the TLT spiraling higher, leg C. I think it's still going higher. Okay, look at this left side, right side price time match. It's 1 week late to that target that I had right there. Left side, right side. The high should have been 138.50 coming in last week. Instead, it's this week. We've still got another little bit to go. We've got a day to go, day and a half. Let's see if we can hit 138.50. And then if it goes above that, then I'm stuck. I'm looking at a brand new leg C in the monthly, which should be /E/C on the TLT. So all in all, what we're looking at here is some sense of when there's a theme. Oh, I haven't spoken about this. When there's a theme and you've got Brexit, you've got the Fed. As I said to my subscribers today in my opening call, folks, try it out. I think you'll like what you see. And if you're just looking at longer term, what am I looking at here? If you're looking at longer term positions, to know what the market, the overview of the market, I think it's very nice to be able to do that. I tried my best in my monthly charts to look at the bigger picture. Remember, I'm still looking for all-time highs in the market, in the Dow. So this is what I do. Here's my daily chart right here. Let me just do this. Bring it across. Look, there's the daily. Very big synapses. The VIX dip, but might rally again today in the 20s. And that's what I said. I thought there'd be a narrow range. My thinking was that after the initial plunge, we would get a narrow range. Nah, this is not exactly a narrow range. So this is from yesterday. And where are we today? This is the chart that we're looking at right here. And this is where we are. Look, we hit that pink line. That was my line of demarcation. We've gone under it. That's a leg B. This makes the 17,385 200 period exponential moving average. It's starting to make it an attractor, a magnet. So we've got to be careful. It could still be a bounce today. We're watching this real closely. But this is the daily chart which says the arch formation is potent. Okay? And then I do the 120-minute chart. And the 120-minute chart right here, what I was looking at was this pattern, this H pattern. Well, we went under it. And look, I said you've got another bar. You've got 2 bars maximum to get above 17,595, and we're at 17,561. We haven't done it yet. So these are all techniques. Everything that my subscribers see is delineated with technicals that we actually study as we're doing it. We even have a study piece I'll show you in a moment when we get back. So this is it, and I'll be right back. And then, of course, there's the overview section. I'll talk about these things when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Is this year analog to 2008? Should we wait until mid-July to get long the S&P based on '08 patterns? You know, I'm not seeing the match with the '08 chart formation. I'm seeing a lot of match with the real estate and all that. Actually, it's accelerated so much I can't do it every single day for my subscribers to give them the charts and the pictures and all that have to do pertaining to the glut in real estate or the expansion in real estate. But I don't see that yet. And yet, at the same time, I don't want to step up to the plate to start doing the buying. That would be the big buying for another big rally in the summer. It's just there are a lot of conflicts going on. Let's just let the turmoil, which is reflected always in the. Remember the market. People say the market hates uncertainty. I just roll my eyes and shrug my shoulders. Every day the market deals with uncertainty. The market hates uncertainty about uncertainty, and that's what we've got. You've got to be 2 steps removed, and that's exactly where we are, and that's why the market's so shaky. It doesn't know what's going on, and that's what's being reflected. So yeah, I don't see that. In other words, do you want to be buying puts in the S&P for absolutely nothing? Maybe August or September puts in the S&P, which is trading at 2,058 at 1,058. I don't see that right now. This kind of nervousness and everything, to me, it just spells, it's just what you expect to see. And the fact that that the fund managers are buying volatility, that's what let me tell you, talk about volatility. This is what I said this morning. Where is it? Get it right here. There. This is my overview that I do every single day, the third chart or second chart that goes out about 6:30, 7 o'clock in the morning. This is the overview. This is the 120-minute chart of the Dow, 120-minute chart of the VIX. This is the daily short-term Richard Arms short-term trading index. And right here, we've got the Dow bar chart and the S&P down chart. With a down arrow, sell modes are in place. All right. So this quintile, I like to call it this, these quadrants, these quintans tell me exactly. I go overview on market data, talk about what's going on, what's to expect, and then finally I always give right here. I say gold is benefiting from the Fed's non-stance, and today selling pressure holds into the mid-session with the VIX in the 21s, Dow minus 60s, S&P minus 8s, comp index minus 12s. Then a weak close is probable rather than options-inspired upside reversal. We just saw that it's used up its energy. And then I say a triple-digit slide could accelerate into the close, and that's if the VIX is in the 21s. And right now the VIX is at 22.04. So that's what I do every single day. Give parameters right in here. I give all the parameters. You can see here. I say VIX under 1920s. The market rallies over 20.40s. Market slides every day. I give these very. I can't even tell you how long it takes me every day to do this. And then I showed the triple yield chart. That'd be going lower. Okay, you want to see the triple yield chart? I can't do it. Yes, I can. Right there. The triple yield chart has just plunged to 2.373. Oh, the 5-year T-note is about to test this low of 10.08. It's 10.73. But the 10-year, so we've got 2 out of the 3 have broken to new weekly lows. All of that is in my report every single day, what we're looking at, why we're looking at it, why we've got the positions we've got. And here's my this is the trade that we've got here as the Chapman Wave, ALB, Albemarle, and it's holding very nicely. It's down only 43 cents. This is the one that I said, it made an all-time high. Let's see if we can short it. We still, okay, we shorted 81.01. It's at 79.28. It's holding well. So, hey, maybe this is going to be a thing to buy. We don't know. But anyway, it was an experiment in shorting and trying to time a top. We'll see the days here. So as we're about to go, let's say Thursday, don't forget, you've got your swimming lesson. You've got Steve Rhodes. You've got Dave White. You've got Tom O'Brien. You've got Andy. What more could you want? I'll be back tomorrow. Check out my opening call. I think you'll find it very interesting and hopefully lucrative. I'll be back tomorrow. Have a great day. Thank you for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.